Alright, the yield curve, part of the yield curve to be specific, has finally inverted. If you've been with our channel and have watched my videos, we've talked about yield curve for at least about 3 to 4 weeks right now, but part of the yield curve, specifically the 5-year and 10-year, has inverted.
Recession fears are rising with the collapse of the spread between the 2-year and the 10-year bond yields, but there's another spread that's watched pretty closely by the Fed and the economists.
A lot of people are saying this is a big deal, and some are arguing that this is actually not so much of a big deal.
But when this curve inverts, it inverts more closely to the actual recession than the 2-10 spread, and you'd think that would be right. And right now, by the way, this is screaming like, I don't know where it would be, like a kind of mid-expansion. It's nowhere near inverting. It's going the other way as the Fed hikes and interest rates are higher, and that's the way it's positioned right now.
But let's go into the screen, let's look at the yield curve and see why this could be a big deal. And if you're a trader, swing trader, position trader, or a day trader, what does it mean for you? Before we start, I need to tell you something. A proper yield curve should look something like this. So the longer that you go in time, because you're taking on more risk, so if you're taking a 30-year risk versus a 10-year risk versus a 5-year risk, you need to be compensated for it. So you need to make more money as you're going further and further away in time. And that's what a contango basically looks like, and this is what a healthy yield curve looks like. So the longer you go in time, you need to be getting paid more and more because you're taking on more risk. And now this risk, these are government bonds, so they're default free, but the risk here is time, right? Your time is part of your risk, so you need to be compensated. But what actually happened last night, and this is the first time this has happened since 2006, is that the 5-year and a 10-year inverted. Usually people look at the 10-year and 1 year, or the 2-year and 10-year, and those are what really can predict a next recession or a slowdown. But this is definitely a direction it's a move in that direction. It's something that we have to pay attention to. If you look at this chart, over the last seven times that we've had a recession, every time we've seen an inversion in the yield curve, specifically between the 10 and 2, we've seen a recession. It happened here, it happened in the late 1990s, we saw a recession within 18 months, it happened again in 2001, in about 12 months we saw a recession, over and over again. So this is something that has actually happened quite a few times. The reason for that is when the yield curve gets inverted, so it looks something like this, instead of this, that's when basically the market thinks that in the longer term the rates are going to go down, and that's why the yields is getting flatter. Like let's say this is 30 and this is 10, they're getting flatter, so they think in 30 years the yields in the future are going to go down. Why do rates go down? For two reasons: fear of deflation or recession. And we know they're in both of these times, they're in both deflation and recession, stocks usually underperform. So if you're a swing trader, if you're a day trader, you'll probably make more money if you're short bias rather than long bias. What do you think? Which camp are you in? Overall, in terms of market and how market is reacting, market is completely brushing this off. When you look at today, market sold off a little bit, maybe because of that news, maybe not, but after that, stock rallied. Especially Qs and technology, seems that they don't care about this news at all, and they're rallying as well. Dow, slightly red, IWM is slightly red, and of course Bitcoin, which is a risk-on asset, is absolutely taking off today. And commodities, they're all in the red. So it seems like today is more of a risk-on day, and it seems like market doesn't really care about this yield curve, especially the 5 and 10 getting inverted. Do you think it's a big deal? We're gonna see a recession? Let us know in the comment section, and of course subscribe to our channel. Thank you.